Good afternoon and welcome to the AICPA Town Hall Series. I am Eric Auskerson, one of the hosts for today. We've been conducting these for the past 4 months. We greatly appreciate being with you. We always learn a lot. So let me first just cover a couple of housekeeping items. I think many of you are familiar with this modern platform. You can earn CPE. Just click on 75% of the pop-ups. At the end of the webinar, you can click on the CPE button to get your certificate, but don't worry if you don't get it at the end of this session, you will receive an email about it. At the bottom, there's a toolbar with many capabilities. One is the question capability, and we do look forward to receiving many questions throughout today's webcast. We're going to be reviewing with you at the start here some of the frequently asked questions, so hold off for about 5 minutes before you start asking them. And then there also are a number of materials that you can download with that orange download button, so take advantage of that. Today, your presenters are Eric Auskerson. I'm the CEO of CPA.com, the AICPA's technology subsidiary. With me is Sue Coffey, who leads the public practice area, and I know many of you are very familiar with her activities. Barry Melanson is also with us this week, the President and CEO of the AICPA and the broader association, and he's going to be sharing some thoughts about all the different legislation activities as well as just a professional outlook on what's going on in this current environment. And then we also have Lisa Simpson, who's been on every one of these town halls over the past couple of months, and her team has been working tirelessly on all of the resources that we've put in place to support these business relief activities. We've got a full agenda. This is what we call a sprint week. I mean, it's been a marathon or a triathlon over the past few months, and there's just a lot going on this week. We're going to talk about the recently released FAQs. We're going to talk about all of the discussions in D.C. with the pending legislation, and then we're also going to have some strategy discussions with Barry and Sue on talent and the outlook for the profession. But let's just now quickly review some of the past town hall series and past FAQs. So Lisa?
Thank you, Eric. So we always like to give you this sheet in case you missed one of our sessions and you're wondering about a particular topic. So you'll find a link to our AICPA Town Hall series, and if you see a topic that you're particularly interested in, so for example, if you missed the session on employee retention credit, look for the July 16th Town Hall, and you'll get to watch that video again. We also like to start with our frequently asked questions. So Eric mentioned, hold on to your questions for just a little bit. If you could take a quick look at this spreadsheet that we've got up there for you, you'll see some of the topics that we get asked about frequently, and you'll see that there's an FAQ that we have to point you to. These are the AICPA FAQs, and then some link to other resources. But if you see a question on here that you're interested in, you need to know the answer to, go check out the AICPA FAQs that are in your resources, your materials for today. And the always popular, here are the questions we don't know just yet. So we got a little bit of insight on the owner question, and I'll dig into that a little bit later. Also got some insights on retirement costs and utilities, so hang on to your seats, we'll get there. But one of the biggest questions that we still have and that we did not see in the FAQs is around how FTE reductions will work if the borrower is applying for forgiveness before the end of the covered period. We have asked the question and have been told that we'll need to wait for an answer on that one. So we do not have any guidance on that yet, but we do hope that that's in the works and will be coming out. The last two items are about tax deductibility, and Barry's going to talk about those a little bit later in the session for you.
Thanks, Lisa, and it's good to see that we are crossing off a few of these frequently asked questions, and I think we're going to have some really good information for everybody about the August 4th FAQs, so we'll be getting into that in a minute. But before we get going, just want to talk about how we're putting this information together, the overall engagement with the stakeholders. What we do every week is we bring to you the best available information that we have. Our best thinking, we're providing recommendations. I can tell you over the past couple of days, we have spoken with Treasury, we're always speaking with the firms. We've had a number of large firm calls, a number of meetings with the payroll providers, as well as the banks. So all of these different groups are playing a critical role in delivering these business relief activities, and we're doing our best to digest all the information in real time and bring it to you weekly or biweekly right now. So let's just talk a little bit about what is happening with the firms in the marketplace. This is a slide that we showed actually a couple months back, and why we're showing it now is because things are happening in different ways across the U.S. I mean, there's some states that are shutting back down, and the firms are having to support their clients with those business shutdown activities. Then there's still a lot of business relief going on. Even as we speak this week, there's still PPP applications being submitted. But what we're thinking more and more about is the next phase of business relief and the business model review. In the last couple of town halls, we've talked about how the firms are working on business model adjustments. There's lots of opportunities at times for some businesses to take advantage of low-cost inventory. There's also situations where businesses are in distress. So we think this next 6 months is going to be just as important, if not more important, than the last 150 days. And we've been saying regularly how this time has really built relationships like none other. So let's we got a little bit of static on the line, so if someone who's not speaking, if they can mute their line, that'd be great. Let's just talk a little bit about the media focus. We do this on a weekly basis, and this is going to be a good setup for our legislation discussion because it's all about the legislation. This first article here, endangered Republicans are encouraging McConnell, don't leave town until we get a bill passed. We'll talk about that. Rubio discussing that there's a surge of potential business layoffs if we don't do something about PPP2. This is really, that article is about PPP2. And then Pelosi's taking a hard line on some of the Republican policies. So there's a lot of partisan discussions going on. So I'm going to bring Barry now into this discussion. He's been very active with our advocacy team led by Mark Peterson. And what you see on this slide is just discussions around, PPP phase 1. We'll be talking about the FAQs. Barry will mention a little bit about the simplified forgiveness discussions. And then we're also beginning to really get ready to support the firms for this CARES phase 4 and PPP phase 2, as well as some additional loan programs. There's going to be additional loan programs, some 7A recovery loan programs that look like they're going to be making it through the bill. But Barry, I'll let you just kind of comment broadly, then we'll get into a few of the more specific details.
Right, Eric, and thank you for your leadership and the whole team's leadership on all of these activities. And clearly we are in, as we speak really, we're in the midst of a lot of uncertainty and a lot of negotiations related to what will be in the next phase or whether there will be a next phase, including discussions that actually, based on certain reports, have been frustrated on both sides in the last couple of hours, and the president talking about seeing what he can do through executive order. And I think you laid it out well when you talked about some of the media aspects. We're in an environment in which Congress would typically not be legislating at this point, particularly in an election year. You are looking at very shortly both of the national conventions, and basically you have an environment in which the economy and other activities, not just business support, but other activities in the sort of discussion points, including unemployment, and you have that sitting in an environment of a politically charged situation. where people, both parties and then people within the parties, making calculations as to, what's the right thing to do as it relates to their own particular situation. And, clearly Friday is sort of a self-imposed deadline that was brought forward to get this done. Deadlines usually get passed in Washington, and then, there is some shortly thereafter activity. The president is saying that by Saturday he intends to issue some executive orders. There is some debate, a lot of debate, as to really how much he can do with executive orders, what's totally legal and workable. He's focused on unemployment, the unemployment supplement that expired on July 31. He's focused on maybe suspension of payroll tax payments to try to give some cash flow relief. There will be, whatever he can do will be somewhat limited, and if there isn't a deal by Friday, he probably will attempt to do some things through executive orders. What we can look at is really what's out there, and we know the House a few weeks ago passed a bill, about a $3 trillion bill. The Senate is working on a bill. It would be more modest, still very, very large, maybe in the tune of about $1 trillion. And the two parties are really far apart on those two benefits. One of the key components is the PPP threshold issue, which we have been pretty vocal on the need to streamline these activities. In the Senate bill, there is a notion of a threshold where there would be a very easy loan forgiveness. It's presently at about $150,000. That's already being talked about being amended in certain areas. There is some downward pressure on it because of the fear of fraud. And I think we need to be clear, Eric, and say that this is probably not a stroke of the pen if it gets passed at, let's say, 150. We think it probably will end up a little bit further down than that, maybe 100. And it's not going to be just a stroke of the pen. Borrowers will still have to do something, probably a simple form or just a self-assessment that they're in compliance, some requirement to keep their records for a certain period of time. So it won't just be an automatic type of thing, and even though that is the term that's being used in the media and around the halls of Congress to some degree, there'll probably be something that's going forward. And I know everybody has on their, sort of the tip of their tongues the issue of deductibility from the expenses with PPP funding. That is not in the bill. We still believe that that there is a really good chance that will be in the bill. There is bipartisan, bicameral support for this. The IRS or the Treasury is not in favor of doing it from an administrative perspective, and that's probably one of the reasons why it's not yet in the bill. But we still believe that based on the intent of the original act, that there is a good chance that this will move forward if, in fact, there is legislation that moves forward. And we have to continue to put that caveat there. You would expect some pressure for legislation that could actually slide into September, however, if, in fact, the Senate goes home, there's no deal to be had, and then potentially the pressure for a deal would come back in September. So it's not certain it would be in August. But we think this next package, there's a reasonably good chance for the deduction. And we think that if it's not in this package, however, that would mean that it probably would have a tougher road to actually ever become part of the law. And so it's something to be watching in this current discussion. And I guess, Eric, the other major point is to relate to what's likely to happen related to some of the major provisions that we have been advocating for and writing about. I just mentioned the full deduction for PPP, and I gave you that scenario. We have been, pushing for the simplification process. As I said, we do believe that will be part of it, and even a reasonably simple process from wherever that threshold is at, let's say, 100,000 up to that $2 million mark. We have also been very vocal on the mobile workforce issue, with so many people working at home, the unintended consequences of state income tax. We have long been in favor of a piece of legislation that would have a de minimis rule in 30 days all the time. but obviously it's an elongated period of time today, and that has in fact never been enacted. There is a provision in the Senate bill that would grant relief on the mobile workforce provision. We do expect that that will have some potential to move forward. There are some states that are net losers on that, New York being one, and that could factor into the politics. 501c6s, there is a provision in the Senate bill. We again believe there's bipartisan support for this. If there will be some limitations, a number of employee threshold. There is a feeling of Congress of organizations that are not predominantly lobbying organizations, meaning that predominantly lobbying organizations would not qualify. And there's still some real significant detail to be worked out as exactly what that means. And then maybe the two highest profile debate issues in addition to the unemployment extension, the supplemental unemployment extension, and that is state and local government relief. That's a major part of the House bill that's already been passed. It is not part of the Senate bill. It is likely that there will be compromise on that. We have articulated the need to address that as the sort of dire circumstances many state and local governments will face. What will be covered becomes a big political issue in how that gets sort of compromised. And the other side is the liability protection issue. And the liability protection issue is one that hundreds and hundreds and hundreds of organizations in Washington are part of expressing the protection that business must have and trying to comply with the health issues, the reopening of offices, the unintended non-compliance that might occur in these environments. And again, that is not in the House bill, and Majority Leader McConnell has said that is a must, a red line issue for the Senate to move forward with a piece of legislation. I think you can think about it in the context of gross negligence, that simple negligence, there should be some protection for businesses in that space. If you cross the line into gross negligence, then there might still be liability that's out there. And so, if you're optimistic, you see that this passes quickly, that there's compromise on these issues, and it gets done before they officially are out in August, which is essentially in the next several days through the weekend. If you're more pessimistic, you see this as the Senate adjourning without the scope of a deal. That's probably the best you can hope for, is sort of the principles of a deal, the total dollars, the major provisions. So if you're pessimistic, that the Senate would go home without that deal in place, and that would certainly push it into a September timeframe. And what members of Congress hear when they're home in their districts or in their states would have a lot to do with what that would look like in September. We would say probably the most likely scenario is that the Senate will pass a bill at a very high principled level, and then negotiations would continue with the House and with the White House through August, through the August recess, by a small group of people in Congress that works out some of the details, including the ones that I just covered, like 501c6 and where's the threshold on forgiveness, et cetera. That would be worked out within the compromise language on those details in a final bill that would be passed in September. We would think that would be the most likely, but the Senate passing something would give you an indication of what would happen. And I guess the last point I would make, Eric, and turn it back to you, is the issue that, some of these issues, I know your clients want answers, I know you want answers as members, but I think you have to take a step back, like on the tax deductibility, like on the level of forgiveness. Lisa wrote a great blog on that. It's probably important to communicate to your clients, just pausing through these times to see how it all plays out. I know that's not what everybody wants, but the main issue here is this is work moving forward. It is still continuing to be a work in progress, and it is going to have a lot of moving parts, certainly over the next 30 days.
Yeah, well, Barry, thanks for that great summary. And so much, you covered a lot, and when you think about, one of the top topics here, the PPP, it does look like there'll be some type of simplification, as you said. It's just a question of where the threshold level is. and then for their clients, there most likely will be a PPP2. So right now we're saying September. We've made some predictions before on these town halls. It is DC, so things could happen more quickly. We will stay really very closely connected to these activities, and we'll share immediately anything that we hear from the policymakers and get that out to this community as soon as it happens.
Right.
Sorry.
Eric, let me just give a quick comment on PPP2. What's in the Senate bill is a notion of a business having to have a 50% decline in revenue in a 2020 quarter compared to the corresponding 2019 quarter. We have been very vocal, as well as other business groups like the U.S. Chamber, that threshold, and the Restaurant Association, that threshold is too high, that if you really do have a quarter-to-quarter decline of 50%, it's maybe, particularly with a low-margin business, it's questionable as to whether that business may still actually be in business. And so we're already seeing Senator Rubio proposing a lower threshold in the 30 to 35 range. Senator Collins from Maine also part of that process. And so, we think that will come to pass, and it really will be about those businesses, sort of a second bite at the apple, that are most vulnerable. But there will be some thresholds that will have to be met. And we just hope that our voice has been about having a reasonable threshold that can, in fact, be met and still be in business.
Thanks, Barry. And we'll be working on putting tools in place to help with those type of threshold tests. So let's now move. Barry, we'll be coming back to you towards the end for some additional thoughts. So, Lisa, we got the FAQs August 4th, a little bit of a surprise, but some really good information, and answered maybe 75 to 80% of the outstanding questions. So I'll let you take us through them.
Thank you, Eric. It was a surprise, and if you look at it, you've got 10 pages of FAQs, a total of 23 questions. I'm going to go through these fairly quickly for most of them, but we do have them listed out so that if you see a topic that's of interest to you, then you've got the hyperlink up in the title of the slide so that you can go find the one that particularly you need to check out and get the details on it, if I don't talk about it in detail today. So the first section is on general loan forgiveness questions, and you'll see the basic questions that were asked there. A reminder about the EASY form. If you have a sole proprietor with no employees at the time of application, and that could be an independent contractor, et cetera, EASY is going to be the preferred approach. We actually spoke with Treasury today about kind of what that process looks like, and I've seen several questions come through the Q&A. If you are a sole proprietor and no employees, basically transfer that money that you got as the PPP loan over to however you're normally taking distributions, and you won't have to actually document payroll costs or anything like that because you don't have payroll costs. You're a sole proprietor, no employees. So the process for those types of situations should be very simple. So again, just wanted to call that out since we have been getting questions in the chat about that. And we can go to the next slide. We have lots of questions about, or FAQs about payroll costs. Again, many of these have already been addressed in either an interim final rule or the instructions to the loan forgiveness application itself. There is one that I did want to specifically call out, item number 3 there. If a covered period ends during a pay period and you're a borrower that is on a semi-monthly or monthly pay schedule, so you may have to allocate your payroll costs in that last pay period. And so this FAQ discusses the approach to that. The other questions on here are, I think, fairly well understood, but again, if you need to dig into the details, you've got the reference there. And then on the next slide, we'll talk about some more payroll costs, and these get a little meatier. We talk about excuse me, I'm sorry, I hit the wrong button here. We'll talk about, I apologize, I've lost my place. My screen went blank, so I'm trying to get back to my slides. We'll talk about retirement and health insurance costs, and those have been, we've gotten lots of questions about those as well. So just as a reminder, do not include the employee portion for either healthcare benefits or retirement benefits. We've gotten some questions in the chat today about what's included in healthcare. So for example, is life insurance or disability included? There's not clear guidance on that yet, so we may see an additional FAQ come out on that at some point. The point I wanted to make on healthcare benefits is that second bullet. Don't include expenses accelerated from periods outside your covered period, or if you're using the alternative covered period, don't pick those costs up. So don't try to prepay healthcare benefits according to the FAQs that were released. Same thing on employee retirement benefits. There's a specific call out to not prepay those retirement benefits. So on the next slide, I give you a couple of examples because I do know this is a common question. And a lot of the questions that we get are around if a borrower is paying their 2019 contribution during their covered period, is that cost eligible for forgiveness? It seems that based on the FAQ that we got this week, that as long as that payment isn't accelerated into the covered period, then it should be eligible for forgiveness. Conversely, if a borrower is paying a contribution for the 2020 plan year that normally they wouldn't fund until 2021, so maybe it's a profit sharing component or something like that, that expense is probably not going to be eligible for forgiveness. The regular contributions, as long as the borrower is not accelerating the payments, that should be eligible for forgiveness. So hopefully that helps with some of the questions around those costs. On the next slide, we'll talk about payroll costs for owners, another big topic that we've had a lot of conversation about and some conflicting opinions about. So I'll call your attention to a couple of things. The owner compensation eligible for forgiveness is where we're going to find this, and we see our first definition of what an owner employee is. It's defined as an owner who is also an employee. There, in the current guidance, there is no de minimis around that definition, and we may see some additional guidance come out on that in the future. But currently, our definition is an employee, an owner who is also an employee. I've listed the payroll caps for loan forgiveness based on the covered period. So for your non-owner employees, you'll see that they have a higher cap at a 24-week covered period. Owner employees are continue to be limited to 2.5 months of 2019 or 100,000. So it comes out to 20,833. On the
just on the owner employee, and just to reemphasize the point you made, we do have questions in to Treasury on that, and our understanding is that there will be, this couldn't be fully addressed in the FAQs, and there'll be potentially an IFR coming out. So more to come on that shortly, and it's back to the points we've been making all along that we've got almost all of the information here on the forgiveness process, but patience makes sense just to wait to complete the full application. We should have all of the information shortly. So back to you, Lisa.
Thank you, Eric. If you've been on these sessions before, you've seen the chart that's on the right side of the slide, and you'll notice that it's gotten a little more complicated because of the FAQs that were released this week. So we'll go through that and see if you get some clarity here. I found the FAQs in this section to be very clear, well-defined, so hopefully we'll wrap up this issue on non-compensation costs for owners depending on the corporate structure. So if you look at a self-employed, a Schedule C or Schedule F filer, they do not get to deduct health insurance, retirement, or state and local taxes assessed on compensation for the self-employed person. If they have employees, then those costs for the employees would be eligible. Similar situation if the borrower is a general partner. If you look at the S-Corp owner employee, health insurance is specifically carved out as not being eligible for forgiveness. However, there's the caveat there that it was probably included in the 2019 compensation. Some borrowers may be including those costs in payroll on a monthly basis, so you'll have to take a look at the particular borrower situation for that. Retirement costs are an eligible expense for an owner-employee. They are not subject to the cap on compensation, but they are capped at 2.5 divided by 12 of the 2019 contribution for that owner-employee. State and local taxes assessed on comp are eligible for forgiveness. There's a new line there, family members of 2% S-Corp owners. So if you're an S-Corp owner, you're probably already familiar with this 2% threshold. That means that your health insurance costs and the costs for your family members are included in your W-2. So similar to the treatment for the S-Corp owner himself or herself, the family member health insurance premiums are not eligible for forgiveness. Retirement costs and state and local costs are. And then you've got the C-Corp owner employee. The only challenge there is that the retirement costs for the owner employee are capped at based on the 2019 contribution. So again, that's a lot to cover, but you've got that chart there, and hopefully that'll clear up some lingering questions that we all had. The next section of this week's FAQs focuses on some non-payroll costs. Again, lots of details there, but I'll point out a couple that we've gotten regular questions on. Is interest on an unsecured credit eligible for loan forgiveness? I think I have a couple extra words in there, but the answer is no. So if you're a borrower with an unsecured line of credit or some other unsecured debt vehicle, the interest on that loan is not forgivable. We also have had lots of conversations about what's included in utility payments, and a question, an FAQ was released to try to clarify a reference to transportation that was included in the guidance initially. The reference to transportation as it relates to a utility payment is as a service for the distribution of transportation if it's a state or local fee assessment. And the FAQs will give you a link to a Department of Transportation article that explains exactly what that is. I don't know how many borrowers it's going to apply to that are actually getting assessed for some transportation services, but you can check that detail out. One thing I do want to point out around transportation and fuel, because fuel has also been a common question, although not specifically addressed in these FAQs, we do feel pretty secure, like, 99.99% secure that fuel in a business vehicle is an eligible cost for forgiveness. So we have an IFR that particularly references fuel in the business vehicle, and you'll find that in the AICPA FAQs if you want to learn more about that. All right, on the next slide, we talk about loan forgiveness reductions, and the first one has been explained in the instructions to the loan forgiveness application. So I'll just point out that the borrower is required to maintain documentation to show compliance. Another question is about number 3 there, if you have an FTE reduction exception for an employee who's in Table 2, so that's an employee who earned more than $100,000 during for 2019, they are eligible for an FTE reduction exception, and you'll just include them up in Table 1. We also get some good examples of calculating salary and hourly wage reductions. So I've given you a couple of those on the next slide, and you're able to take a look at those and follow the math. The FAQ gives you a reduction example where it's a salaried person, and also a reduction example for an hourly person. I think they may have chosen just one covered period, but I gave you both so that you can see how those calculations are working there. So it's important that you just kind of get yourself familiar with how the math actually works there, but our calculator will do that, and a lot of the other calculators and the payroll compliance reports will hopefully do that for you as well. So if we scoot to the next slide, this is a big one, I think, because, again, this has been another lingering question that we've gotten in lots of our town halls, and it's about when you're calculating loan forgiveness for that, or a loan forgiveness reduction around salary or hourly wages, do bonuses, commissions, et cetera, count in comparing compensation for an employee during the covered period to the first quarter of 2020? And again, another great borrower-friendly FAQ here, bonuses and commissions are not included in that calculation. So it's really based on the base rate of pay. Did a person's salary go down by more than 25%, or did a person's hourly rate of pay go down by more than 25%? So that's another really important FAQ and a borrower-friendly one.
Lisa, that's a fantastic
that's it for the
summary.
FAQs.
Yeah, and a lot of great information in these slides. I mean, that last point, that's a big one. And the intent here, in many cases, is to kind of support the borrowers. So this base rate only being factored in salary reductions. And I'm glad that we finally got the fuel question answered. So thanks, Lisa, and we'll come back to you in open forum. So just some quick updates related to lender activities. This is a slide that we've talked about in the past. There's 5,400 lenders out there. You know that in this forgiveness process, it's important if you're going to be doing work for a lender to have an engagement letter. One thing that we're beginning to think about is PPP2 and how we want to make sure that firms are proactively establishing any engagements with lenders if they're going to be supporting that activity. And we'll be talking more about that in upcoming town halls. We did release a PPP forgiveness tool, which is based on the AICPA forgiveness calculator. This was developed with our FinTech partner, Biz2Credit. I encourage you to watch these two videos. We've got a CPA firm demo video and a borrower demo video. I know about 25% of the attendees are CPAs in business and industry here. So, a lot of these tools are focused on supporting you as a borrower. And this tool also has some special CPA client counsel capabilities where you can manage all of your clients' forgiveness applications. And this is highlighted here what this does. It's the dynamic questionnaire. It supports doing the calculation. It ties back into the AICPA forgiveness calculator if you want to leverage that. It allows you to upload source documents, and it enables the e-signature of the 3508 or 3508 EZ form. And we will have this updated to support any simplified forgiveness. If there's a new form that comes out, we will include that. So we've got 2 more days for applications right now, unless Congress extends it further. But right now, the final date for PPP applications is August 8th. We're always asked on these calls who's still receiving applications. Here's a list in alphabetical order. And one thing we do encourage is just to start thinking about PPP2 and making sure you've got lots of options for your clients. What I want to do now is bring Sue Coffey into the discussion. Sue and her team have been thinking a lot about, the opportunities that are out there due to the environment we're all working in, and also been putting a lot of thought and strategies into talent development. So welcome, Sue.
Yeah, thank you, Eric, and I appreciate the opportunity to be here. And I do want to pivot a bit to tee up a discussion about the opportunity that you suggested beyond government stimulus, almost in a tee up for Barry to kind of bring this session home later on. But, I know this group has spent the last 4 months discussing the ins and outs of PPP, supporting our clients on the application process and now loan forgiveness. And there's going to continue to be a lot of opportunity with PPP2 coming along and other government support and stimulus relief programs, all, critical to, the survival in many respects of some of our clients. But I wanted to kind of share some of what we're hearing from conversations we're having with firm and business leaders that really position our profession as leaders in the recovery of our nation's economy. And the spectrum of support and services is enormous, and Barry's going to discuss many of them in a few minutes. And you're going to see a lot of opportunity in the tech space. You're going to see a lot of opportunity in the form of new industries and specialized areas of practice that are likely to require new skills for some of us. And that's really what I want to very briefly touch on. Those opportunities may exist within our firms, or they may not. They may be completely outside of our wheelhouse. And we may not realize that they exist, or we may just be starting to think about them. And they revolve around things like systems controls, security and privacy, something that every single business, regardless of the size, is concerned about. Cybersecurity, supply chain management, every business has supply chain issues, information integrity. It runs the gamut, and these are areas that if we miss the opportunity, there are other service providers out there that will jump in. So I kind of look at it as, we need to make sure that we know what the opportunities are and we have the skills in place within our firms or our businesses to address them. And it may mean reskilling existing professionals, and many firms are doing that. We've got a lot of resources within our organization to help. I was talking to a firm a couple of weeks ago, and they are reskilling every single professional within their firm on bankruptcy. Talked to another firm that same week, and they are introducing cybersecurity talent into their service line. So there's a lot of opportunity that runs the gamut. But it also may mean bringing on new and different talent from the outside to supplement the talent that we have within our firms. And what we're seeing right now are some really interesting opportunities to acquire that talent, and talent that may have been outside of our reach pre-COVID, because individuals are either being displaced due to business failures, furloughs or layoffs, or individuals are simply unhappy with how their employers are handling the COVID situation. So there's opportunity out there for us to find people that may have been unreachable in the past. Talent also includes professionals just coming into the profession at an entry level as well, so the incoming pipeline. We do a lot of work related to the pipeline, and if you think about it, higher education right now is being completely disrupted. I'm sure many of you have, children that are just wrapping up high school or just entering college and going through, the exercise of, do I send my kids if they're just going to be working remotely, to live in a dorm that may, be a hotbed, right? So high school graduates are actually looking for alternatives, and they're actually looking for stability and where jobs will exist. And we have an incredibly attractive pathway. In fact, accounting enrollments have been relatively stable over the last several years. And as a profession, we have great stability in times just like these. We saw it back in 2008, and we actually see it now. And as I said, students go into majors where they can get a job. But we're looking organizationally at the needs of the profession a bit differently and reimagining what the CPA represents. And we want to make sure that we do it in a way that creates an attractiveness to our profession from a broader range of students that are and will be critical to our profession's success. So those who have strong interest in business, of course, who are interested in the underpinnings of business, accounting, finance, but those that also have a strong interest in technology. So we've been working with the National Association of State Boards of Accountancy to look at the components of CPA licensure differently. And this, I'm talking about entry level. I'm not talking about reskilling our existing professionals or acquiring, talent, acquiring talent that is expert. This is entry level I'm talking about, or a newly licensed professional. And what we've done is we've developed a framework for a new CPA licensure model. And basically what it does is it starts out with a robust core of accounting, auditing, tax, and technology that all CPA candidates would need to complete at the foundational level. Essentially, what every CPA would need to know. Then each candidate would choose one discipline in which to demonstrate deeper knowledge. So for now, we've identified 3 as, I'll call it the first focus disciplines, because they are so representative of what we do today. And that would be tax planning, business reporting and analysis, and information systems and controls. And essentially what this model does is it allows a CPA candidate who we need to do, for example, cyber work, to not have to know the detailed intricacies of complex derivatives, or know the intricacies of estate taxes. Likewise, it allows the CPA candidate interested in tax from not having to know the intricacies of how to perform a SOC engagement, okay? So the beauty of this model is that we can add or modify the disciplines as the market and the profession changes, and it affords us great flexibility to add emerging skills and services. So think about specialties like sustainability or valuation or forensics. You know, one could envision multiple disciplines around that core that really allows, everybody to have this foundation, but then to show knowledge in a much deeper way, in a way that mirrors the profession today. So I come with an audit background, and you wouldn't want me touching a tax return with a 10-foot pole, but I'm a CPA. Likewise, my tax preparer might not be as adept in audit, and he's a CPA as well. So that is actually the model we're looking at, and we're talking about education as well as examination. So we spent a couple of years really working with the profession on what this model might look like, and other stakeholders like the state regulatory community, the federal regulatory community, firms of all sizes, CPAs in business and industry, young CPA students. And we think this is a model that will really position our profession in the future for real success. So with that, Eric, I'm going to turn it back over to you. And I'm sure Barry, in his remarks, will have an opportunity to make comment on some of this stuff as well.
Yeah, thanks, Sue. And there's a lot of strategic information in there, so thank you. Thanks for that overview on both the opportunity as well as this exciting evolution of the licensure model. So we're going to look forward to kind of having a couple of questions here with Barry. Then we've got a lot of great questions coming in that we're going to save a few minutes for here at the end. So Barry, just why don't you kind of provide some broad perspective on this uncertain world that we live in right now and these different pillars that you're thinking about?
Yeah, thank you, Eric, and a lot of great information, as you can see in this meeting. And so if we just step it up a level and think about it from a strategic positioning of the profession, and Sue commented on the pipeline issue and some of the specific opportunities, but I really would encourage all of our members and the firms, and whether you're working in business and industry, if you look at the profession overall, I think about these three things. We know we're in an economic downturn. It's not just U.S., it's global, and the global economy is interrelated to the American economy. And so we have a really, really, really critical strategic role as a collective profession, much like medical professionals did on the front lines of the pandemic. We have this frontline responsibility to help restore confidence. We know that every time we have been in an economic downturn, that the way out of it always has as a component consumer confidence. And particularly in the United States, because we're such a heavy consumption economy, that is interrelated with really the whole global economy because of the way we consume. And so we have an obligation to help the people we deal with, the people we work for, the people who are clients, even our colleagues, to really see confidence in the way out. We have to be objective, but we also have to be part of an ecosystem that finds the confidence going through, and that's really part of our job. And to do that, what you have seen us do, and I think the profession has to be focused on, and clearly some of our members work in big business or provide services to big business. But this recovery ultimately will be about small business. That's why there's so much emphasis by the federal government on this. 6 million businesses with 500 or fewer employees. Almost all of them have either CPAs working for them or a CPA firm relationship. So what you're seeing us do, the work that this team has been doing.
Okay, Barry? I think we lost Barry for a moment here. Shauna, can you unmute?
So, Eric, just to conclude on that, I don't know if you still have me, but I'm not on mute. I don't know what happened on that. But
you for 1 minute, Barry. Go ahead.
I'm just going to say the final point is our trusted advisor role, and I know these previous town halls have focused on that with guests as well, really giving that solid advice to help businesses, particularly small business, survive, not just the compliance with government programs or tax laws, also having the additional trusted advisor notion is critical going forward. So with that, Eric, I'll turn it back over to you and we can hit some questions.
Thanks, Barry. And like we many times do, we've got some additional slides here for your reference. These are some of the broad activities that the association, the AICPA, have in place related to supporting the profession during these times. And then it's kind of a follow-up from Sue's discussion, some of the opportunities and momentum that we see in the different practice areas. So we're going to go into questions right now. I'm going to jump into a couple that I've seen, and Lisa, then you can kind of field a few. There was a lot of questions around the video related to the PPP tool. One thing that I want to highlight related to that PPP forgiveness tool is that over 3,000 CPAs have already registered for it, so it is getting a lot of use. And in your resource materials, there's actually a press release about that, provides more detail. And in that press release, there's 2 links. So you can find the links in many places, and you can also go to our SBA Resource Center. Other question that came in is, are banks submitting the forgiveness applications yet? The answer is no. They can't even do that till August 10th. And what I can tell you is, because we're speaking to so many of the banks, most of the banks are not even going to start taking any applications, forgiveness applications, till the end of August. And many of the national banks are not going to be standing up their forgiveness applications until September. So as we've been saying, just give this time. Lisa, do you want to field a couple of the hot questions that are out there?
Sure. And Sue, we might have to dig into some of your conversation a little more because we've got lots of good questions and dialogue going back and forth about the CPA evolution model, opportunities, and business valuation. So we've already got some agenda topics for our next conversation. We're getting a lot of questions about utilities still, and so just as an FYI, we have no reason to believe that telephone, cable, internet are not considered as utilities, so those can be included. Garbage pickup is, from our understanding, is an eligible cost. Got questions about interest on a line of credit secured by inventory. If your line of credit is secured, then it's my understanding that the interest is forgivable. We will keep referring to our mantra, this is not tax code, and you are going to have to use some judgment in how you apply some of these particular costs for you as a borrower or for your clients. So I think, Eric, at that point, I'll hand it back over to you.
Okay, and I just want to thank everybody again for the questions. What we do here is we take all the questions in, they help drive our resources, and I also appreciate people providing us information about lenders. We add that to future town halls. So in wrapping up here is some of the resources that are available. This is the AICPA.org SBA site, has all of the FAQs that we've been talking about. We'll make sure, Lisa, does it also have links to the PPP forgiveness tool?
It does. It absolutely does. You'll find those links under the forgiveness section of the page.
And then we also have a broader tax resource center. We talked about some of the tax issues today. Leverage that site for more information beyond just the SBA programs. And one thing that we went over that chart pretty quickly about the additional business relief programs, we are going to put a lot of effort into that 7A recovery loan program that we think has good potential of passing. There's just going to be lots of good options for your clients to think about taking advantage of as they look to revise their business model, take advantage of some M&A opportunities, and we're going to be putting together some workshops around really thinking harder about the FP&A area, working on forecasting, planning, and analysis. And here's a slide that kind of really highlights what's happening. 2020 is the new 2025. What is occurring is acceleration and adoption. We're seeing this across the firms with all of the cloud-based platforms. We are going to bring some of our partner companies to one of these town halls in September, and they're going to talk about how they've seen massive acceleration in the use of their services. And what really has changed is just the adoption inside the firms, and we're also hearing from the firms that many of their clients who were potentially, a little bit of a laggard, are coming back to them and saying, can you get me on those cloud accounting platforms or some of those modern sales and use tax platforms? So this is a great time. It's really a great time to build out your business further, to leverage these capabilities, and to provide these more advanced capabilities to your clients. So here at Wrap Up and Next Steps, we are, for the month of August, holding these town halls every 2 weeks. So the next one is scheduled for Thursday, August 20th at 3 p.m. If something significant happens, we will do a special edition. We did that the July 4th week. We will do that again. We encourage you to leverage our LinkedIn and Twitter sites. We are posting information daily there. I want to thank the team here for today's town hall, Barry Malance and Sue Coffey and Lisa Simpson, and also the broader team that put all of this information together. Also want to thank all of you for your time. We really do appreciate connecting with you. We learn a lot from these sessions. Look forward to staying connected and speaking to you again soon. Thank you very much.